Talk us through then some of your calls on iron ore, because we've spoken about oil quite a bit. I want to get into the iron ore, some of the other key metals here, and what does it tell us about the health of consumption?
Yeah, good afternoon. Look, I think at the end of the day, when you look at the price and the volatility, it tells us that there's going to be a lot more supply coming on tap. It's quite interesting because we actually see the government in themselves actually forecasting for prices to continue to fall. And when you see the price fall from, say, $95 a dry tonne down through 60 and 55, you get a sense that the market's expecting more weakness in the iron ore market. And as a result of that, the budget which Australia just presented needs to be prepared for that hit.
What about the latest Chinese PMI data? I mean, what are you reading from those figures? Ultimately, what does it mean for the commodity space?
Well, look, it's iron ore and China, I guess, they go hand in hand. And when you look at the infrastructure and you look at the housing market, steel production in China, when you get to see those PMI data looking a little bit weaker than expected, it tends to rock the boat and tends to reinforce that if we do start to see a slowdown in the Chinese economy, then as a result of that, we'll see a slowdown in demand for iron ore. Remember, the stockpiles are pretty much close to record levels within China. So we really need to start that uptake continue. We really need to see more demand. We need to see positive numbers out of China, in order to keep that price where it is. But I think on a side, the interesting thing is here in Australia, we're still seeing record amounts of iron ore being shipped from Port Hedland. So that gives us a clue that demand is there. It's just that the price isn't.
Let's hold on to the China angle here, because as you have Chinese bonds and, of course, stocks and commodities come under pressure, there's no real hideout for gold. And even though we just had the data out from the China Gold Association, they're seeing bullion demand in China rising to the highest level in 4 years. Is that really going to provide a floor here, Jonathan, for the gold price?
I tell you what, I hope so. I think when you look at what's happening on the geopolitical front, when you look at demand, and it is a theme. Remember, China's out there buying a lot. They're also dictating the price to which they want to buy. And also, if you think what's happened in India in terms of demand, just with the recent season, you get a sense that demand is certainly there, but it's the paper price, the paper market that seems to be pushing prices lower, not the physical demand or not the spread in the physical demand, which certainly remains relatively robust. So I think the physical demand is there. I think the paper side of it, the hedge side of it, certainly isn't. Remember, we're seeing the dollar come under a lot of pressure, yet gold has also come under a lot of pressure. So that nexus is certainly broken, there's no doubt about it. And I think gold is trying to find its own feet before, hopefully, we see a good rally.
No conversation will be complete without digging into the oil angle of the commodities complex. Interesting, some research coming out from Morgan Stanley. They're pointing out that they see Brent rising. Wait, listen to this number, $62.50 a barrel by the end of 2017. Are you as bullish as Morgan Stanley is?
Not yet, no. But certainly for the producing nations, for Brent, that's quite positive. Look, I don't see it that way, but what I do see is that we need to see continual demand in the economies. I mean, obviously, there's OPEC versus the US. There's a rebalancing trying to occur within the oil market, but I think it's real economic demand that's needed. You've got extension of supply cuts coming out of OPEC. You've got the US oil shale, Baker Hughes rig counts continuing to increase. Remember, that's the 16th consecutive rise that we've had in 16 weeks. So you can see there's a lot of supply, there's short supply, but at the end of the day, I think we need to see general global consumption pick up. That's only going to occur if the economies pick up.